Hello, I'm John Sparing, and this is PwC's Tax Insights in Brief. On September 13th, the California Franchise Tax Board published a formal notice of proposed rulemaking for changes to its regulation governing the sourcing of receipts from the sale of other than tangible personal property. The notice marks what appears to be the conclusion of a regulatory process began in 2016, so taxpayers should evaluate the potential impact of the proposal. First, it's important to understand the background of these regulatory changes. In 2011 and 12, California taxpayers could elect to use either market sourcing or cost performance sourcing. Then in 2013, market sourcing became mandatory for taxpayers to sell items other than tangible personal property. As a result, the FTB promulgated regulations on market sourcing back in 2012. Since then, the FTB has provided guidance in the form of both Chief Counsel rulings and Market Sourcing Regulation 25136-2. This latest round of amendments to 25136-2 have been in the works since 2016. During the last 8 years, FTB has conducted 6 interested parties meetings. In the interim, in 2022, the FTB rescinded 2 prior Chief Counsel rulings. The FTB, therefore, is likely to move forward quickly with adopting this amended regulation now that it has been formally proposed. Second, the proposal includes several substantive changes to the existing regulation, including new default rules and presumptions for determining the location of the benefit of the service, new definitions and unique sourcing rules for receipts from asset management services, new definition and presumptions for sourcing receipts from the sale of marketable securities, a new definition for professional services, and new sourcing rules for large volume professional services, and new rules for sourcing receipts from certain government service contracts. Third, these proposed changes may impact how taxpayers source receipts from services and intangibles in the current tax year. Once the proposal is finally adopted by the FTB and approved by the Office of Administrative Law, it will likely apply to tax years beginning on or after January 1, 2024. A timely review of the proposed rules could be critical for ascertaining tax obligations for the current year. Affected taxpayers should review the proposed changes to determine the proper application and ascertain the potential impact on their California returns for 2024 and subsequent tax years. For more details, please read the attached U.S. State Income Tax Digest and linked insight. Thanks for watching. This has been PwC's Tax Insight in Brief.